It is 472014. All right, good morning, everybody. We are back from a incredibly deserved vacation, and I just wanted to say welcome back. Obviously, I thought this was a good little motivational line for our daily positive thought. If you're not willing to risk the unusual, then you'll have to settle for the ordinary. I think that's kind of appropriate for our trading world. Some of the things that are unusual, when I saw this line, I thought of when we look for opportunities other than the equity markets and other than day trading S&Ps, we talk about the knob spread. That's pretty unusual for most beginning traders. It's pretty advanced, actually. But once you start to learn these other techniques and how to capture money out of the market, that's what you're here for. No one ever said that you couldn't learn other aspects of trading. No one said that you just had to look for a day trade opportunity. Because sometimes they just don't come, or many times they come and the move's already happened overnight, or many times the market comes and just, you don't have a chance to get in. So we need to look for other opportunities. Otherwise, if you don't look for risks in the unusual areas, then you'll have to settle for the ordinary. Anyway, I found that interesting. This week we have, of course, a few reports and events, but the one I think that might be interesting will be tomorrow night. Tomorrow night is tomorrow morning, which will be China's unemployment number on Tuesday. It comes out at 1:45 a.m. Wholesale trade, the minutes of the FOMC out on Wednesday. We do have, I think, what will also be very important is look at the demand, which we have for our treasuries. The 10-year note auction comes out at 1 p.m. on Wednesday. Thursday, we have a Bank of England announcement out at 7 a.m., of course, with the weekly jobs number. Then on top of it, we have to see what the demand is for the 30-year bonds. We get that out of the way. We'll look at the knob spreads one more time. Friday, we have this interesting little new number that's coming out. The PPI final distribution, I think is what it's called. FD is why it's said PPI-FD. It's at 8:30 a.m., consumer sentiment. So, I mean, really, if you look at this, what's going to really move the market? I think there's only one thing that for an employment number in China that might be looked at, and again, the minutes of the FOMC. Other than that, the weekly jobs report. And then, of course, the demand or the auction results for the 10 and the 30-year bonds. That's it. We are starting and we enter earnings season. It just seems like this earnings season never really ends. We always have earnings out, it seems. And we start again with ZEP, which I think they make a chemical that's in the chemical sector. We could take a look at that real quick. Specialty chemicals, correct. All right, so ZEP comes out. We have Alcoa kicking off the what is this? The first quarter earnings season, correct? WD-40, everyone knows WD-40. If you live in Florida or if you are a man, there's two things you have in your garage, duct tape and W240, and maybe a hammer and a screwdriver. Wednesday is Bed Bath & Beyond, by the way. Constellation, that's the alcohol, booze, the people that owned, I believe they bought Corona, so we'll be watching them. Taking a look at let's take a look at Constellation right now real quick, just to take a look at this thing. I mean, if you don't examine this as a parabolic stock, I don't know what would be, but most parabolic stocks recent times have ended uglier. And one of the funniest things is we start to enter, as you can see, a seasonal downturn in this market. But the weekly volume's been pretty good, number one. The daily volume's starting to show little signs of weakness. You had a little low closed doji here the other day, and I think that's probably people taking money off the table, maybe due to the fact that we have earnings coming out. So someone just decided to take something off the table there, and the daily volume didn't look too destructive. But boy, I'll tell you what, if this earnings report for Constellation doesn't come out more than pristine, and I mean extremely more than pristine, in a seasonally weak period of time, it's one that may be susceptible for downside action and possibly, if you think about it, a 10% correction at $84 is an $8 move, and that puts you at around 76 bucks, which 76 more or less puts you right back into that zone. That would be about a 10% correction, $8 move, more or less, somewhere around in there. I'm just eyeing this, by the way, not to be exact. But it's starting to look, using on a weekly basis, the weekly stochastics is showing signs of tiredness here, but that weekly volume did not roll over. And one of the reasons is because it did not, Constellation Brands did not form a lower weekly close. It closed higher. In fact, if you look at this, the week before was a doji. It's a high close doji, but it's not the definition of a high close doji because it's not after a downtrend. But anyway, that's stars. I just want to look at a couple names that are coming out with the early earnings, the ones that kick off the week. I think the big names that everyone will obviously be focused on, you've got Family Dollar Store out on, and first off, maybe I should say, hopefully everyone was able to download their sheets. I did it this morning and was able to get it without a problem. This is Family Dollar, and we'll see if consumers were out there to buy. But the thing about Family Dollar is, while it still has a seasonal uptrend going into early April, this thing it's just been, it's to me looking extremely top heavy longer term. Top heavy means look at the way it rallies and you get these long shadows and it pulls back. Then it rallies, gets these long shadows and pulls back. That to me is more a distribution rather than accumulation. Without a doubt, I'm seeing that this Family Dollar might have, if there is any surprise to the upside, perhaps a 5% move. If you think about it, is just under $3, so that puts you back to 61. So what's 61? Right into the monthly moving averages. If the market's going to have any further problems, then it should maintain at the very least. And again, the chart that I'm examining with you together here, what we're going over is a monthly chart, not a weekly chart, a monthly chart. So perhaps it gets up to, on any spectacular earnings, just out of curiosity, if it does have any type of spectacular earnings, I think it will be probably capped up against this monthly downtrend that you see, and it'll just completely remain more range bound. Family Dollar, if we take a look at its seasonal tendencies, what does it typically do? On or about early April, it peaks out, and so this thing has peaked out a little bit earlier. It has a little peak, it ruffles around, and then it has a stronger downtrend going through the end of May. But Family Dollar through the rest of the summer, and it really doesn't, and into the spring, it really doesn't see any aggressive moves to the upside. So if this one rallies, perhaps it's one that later in the week we will look at an opportunity for a bearish, maybe just more consolidation, which would be if it is optionable or decent volume. If it's the option matrix look good, perhaps we could look at that as an options strategy there. In my preference would be a credit call spread. Then again, we go over to, of course, Friday, where we have Fastenal, and it'll be before the open. Fastenal is capital goods. It's just had an amazing run to the upside. However, what I do see is perhaps it might have a little bit more upside. We saw slight selling, some selling tails here from Thursday and Friday, unable to hold those gains over 51.5, as you can see, up to 52. The volume, though, on this little last surge was pretty good on the daily. It was also pretty good on the weekly. So I'd wait until after earnings for a blow-off top potential in Fastenal. A lot of people are actually looking for to see how the banks are doing. And of course, Friday, we've got the two big names. We've got J.P. Morgan, because everyone loves Jamie Dimon on the street. They think he's the greatest guy since sliced bread. And I always say, if it's too good to be true, there might be something behind it. Who knows? But Jamie Dimon's certainly a smart man. And looking at J.P. Morgan in here, it's just in the sector where the banking starts to, if I can get rid of my alert messages here, towards the end of April, we start to see, bring up the weekly chart so that you can see this. Boy, starting and around the April time period, late May, the whole banking, especially J.P. Morgan, starts to lose its bullish momentum from a seasonal perspective. It's had an amazing run, and so if J.P. Morgan blows off the top, because the volume's not really giving me a whole lot on a weekly basis, the price is just, as you can see, with J.P. Morgan, the price has been in a nice solid little trend. It's not aggressively moving, so it doesn't show a capitulation or an exhaustion top formation. Perhaps this Friday it will do that. Looking at the volume action, it's not really trending as strong as price is. Everyone can probably take a look at that. It's almost really non-existent volume. And so when I see something like this on a longer term scale, I think it's probably due for any significant rally. And I've got the quarterly pivots here. I'm going to throw up the monthly pivot on top of it. We have a confluence on J.P. Morgan that perhaps we get a move to maybe near 64, 63, 65. One more breakout, get everyone bullish the dickens on it, and then let's see what happens on J.P. Morgan. I think that it's probably going to have some good earnings or less disappointment because everyone loves it. It's one of those stocks that if it has a disappointing earnings, they'll probably still buy it because they love it. The daily chart, low close doji on a daily basis, bearish engulfing pattern. But the weekly, as you can see, we just don't have any longer term sell signals. So I can't get excited about J.P. Morgan until we get up to 65 or break below 55. And 55 is this last conditional change candle, which the low was 55.34. All right, next, let's look at Wells Fargo, WFC, because this is what we have for this week, and this is what this whole planning and scanning is. What are we faced with this week, right? So the first thing we take a look at is I have no control over last week. I only have to look at my homework going forward for this week. So what am I faced with? The earnings, we have a few Fed head speakers out this week. We have nominal reports coming out, but we have earnings, and here's the focus that we want to see. Now, this is Wells Fargo, and it also seems to be, and again, this is a monthly chart. So looking at a monthly chart, and it's just going back since 2011. So if you think about it, this stock has gone almost parabolic as well. And I can't even get that trend line to show you that. Get it over here. Close enough for government work, so to speak. I don't know where that phrase came from, but it's just stuck in my mind. So breakout on Wells Fargo. From a monthly perspective, it probably will linger a little bit. I don't know if the same kind of situation is interesting because monthly and quarterly pivot resistance is up between this 52 area here, 52.5 up to 53.90. So somewhere up in that zone, if in chance it does have a blow off in there, the weekly on balance volume is super strong. The daily with a low close doji, or actually double check this, I may be speaking out of turn, 49.56, and we had a close of 49.56. No, we did not get the low close doji. That was J.P. Morgan had that engulfing pattern. J.P. Morgan absolutely made the engulfing pattern and the low close doji. Wells Fargo, not so much, but it is an ugly little daily, a lot of red up in here. Do you see all this? This, to me, does not bode well for the short term. It looks like they're very interested in selling this market up in this area. Every time it gets up here, sells off, doesn't do anything, rallies a little bit, sells off. It looks like they went for a stop hunting witch hunt there on Friday. Looking longer term on Wells Fargo, and hopefully this helps you make a determination, it has a very strong seasonal tendency, very strong, to peak out around early the first part of May. So perhaps, their earnings come out, we watch this thing here, the whole banking sector kind of takes a little breather, and when we take a look at competitive names, so let's take a look at Bank of America real quick. Bank of America generated a weekly sell signal, and I know they have issues and they had to make this multi-billion-dollar, they made that settlement the other day or last week, whatever, but nonetheless, it seemed to have made, let me take off the everyone, I wouldn't say everyone, but I was hearing in the media how much everyone really liked Bank of America and they can move forward. But one thing that's scary, now again, this is a weekly chart. They made new highs, the volume didn't agree with it, and the stochastics has a significant bearish divergence on a longer term. Then when you take a look at Citigroup, same thing. Then you take a look at maybe a larger regional bank, a PNC. It's starting to kind of lose its moves up in here. When you take a look at Morgan Stanley, MS, I know they're not a pure bank play, but we have a potential double top. So when I take a look at all the banks, diversified financials, and I take a look at the banks, I'm like thinking, we're about 3 weeks from its not seasonal but annual highs. I want to say, don't be surprised that this weighs on the market. When you take a look at a Morgan Stanley, and I'm surprised, we're going to see probably more and more of these kind of patterns, shoulder, head, shoulder, descending, and it broke kind of like the neckline there. M top formation on a weekly basis. Seasonally, it weakens out. Weekly volume got look at this. The market really didn't move far in price, but boy, they just took the air out of that tire according to that weekly on-balance volume. This is another stock that actually had almost a parabolic straight move from 11 to 30. I mean, it almost tripled, right? So it makes sense that if it comes into a seasonal time frame, even looking at the monthly, longer term, I mean, we came up into this area. We made newer highs, actually, if you think about this on a monthly basis. We made newer highs from this point in time. We made newer highs. Volume barely scratched the surface. So this one, Morgan Stanley, I think we might want to kind of I will be keeping an eye on the financial sector. You may as well. Once we get through this earnings, if Friday, what I think could happen, if Friday, then we see Wells Fargo and JP Morgan, which are considered the creme de la creme in the banking, Wells Fargo is more preferred over Bank of America, JP Morgan more preferred over Morgan Stanley. So if the strongest leaders of the sector fall, they're going to just beat the dickens with an ugly stick on the weakest stocks in that sector. Does that make sense? Let me rephrase it without the euphemisms. If the strongest, best performing stocks don't do well after earnings, which is Wells Fargo and JP Morgan, if they start to go down, then they will probably liquidate the worst stocks in that sector. And from a technical perspective, Morgan Stanley and Bank of America do not look as healthy. So therefore, these might have incredibly more downside left in them, and perhaps, between the 25 and 27. So think about what a 5 to 10% correction on $30 is $3, and that gets you at $27. I mean, where's $27 on this? Man, it was just trading on a weekly basis. It really hasn't even. If we take a look together here real quick with Morgan Stanley, 27. This stock hasn't even rallied this year. So take a look at where we were at the beginning of 226, 1220, 1227. So here we are at the beginning of the year on the open. It started at 30.96, and by the way, it's negative on the year. Okay, so Morgan Stanley, from a comparative ratio or from a comparative analysis study, Morgan Stanley sucks. And that's non-professional terms. In a professional term, Morgan Stanley has definitely underperformed its brethren, its other competing stocks in that sector. It has been negative all year. So if the sector peters out and you're looking for a bearish play, you want to sell the weakest stock in the group. And it seems Morgan Stanley, we may have just found one. So wait until the earnings come out with JP Morgan and Wells Fargo. If they come out and they're not as great, then Morgan Stanley might have significant downside. A 10% correction is $3. A 20% correction is $6. A 20% correction is $6, puts you at $24. And there's $24. So this is how I figure if this thing wanted to break 20% from its highs, and it could. And I'm going to share with you real quickly. Let's take a look at some of the names that have done that. Amazon is off 21% from its highs. This is Yelp. I know I look at it every once in a while, and I kind of mention Yelp because it's in that, social media momentum space. Yelp, just absolutely, if you don't think, let's double check, do you think that's 20% off the highs? Try 35%. That's an owie. That's get the Band-Aids out. And funny thing is, I think Yelp, and I think a lot of these stocks, if we can get them back down, and you may want to mark this down on your calendar, but I think if Yelp gets into the 58 to 60 zone, I think we might just have, and perhaps it could be a little bit lower because it had this huge gaping hole in here. So maybe, we got a little bit more to the downside. They've already whacked it with the ugly stick, and they could get a little bit more uglier over time. There's no seasonality. It's a new space. It's new. But Twitter, here's one that, just to prove a point, can they hit things with the ugly stick? And from peak, how much of a correction have we seen? 40% off the high. So yeah, we could see CMG, Chipotle Mexican Grill hasn't quite started its descent, but from a seasonal perspective, on or about middle of April, this thing, and double check, because Chipotle hasn't been around that long either, but boy, it has a seasonal tendency on or about the middle of April, April 19th or so, to finally move lower. The volume action from this big, huge move on Chipotle Mexican Grill, if there's any strength in this market this week, any particular strength, Chipotle Mexican Grill could be worth exploring some downside. How about Netflix, the one that just, this is one that we're probably going to see a little bit more on the uglier side. It's going to have probably into this range, I would say the 300. You got another 30, 40 bucks to the downside there. But here's another stock that over the last 2 weeks or 3 weeks, let's call it. Here's another stock that's off 27%. So we could absolutely see, if the market is going to reverse and turn, some of the names that enter a seasonally weak period of time, which is some of these banking stocks I just mentioned, we could see them getting whacked easily, a 20% move on some of these names, and that would be Morgan Stanley. All right. Now, let me go in and talk about what sectors do look good. The funny thing is, if you look on our chart here, friends, if you look at our chart, we actually have April seasonal sectors. Notice where it says XLK. What is XLK? Technology. But John, you just showed me some of these tech names that are getting beaten up. And yes, while that's true, these are the seasonal sectors that begin a seasonally strong period of time. So what I'm going to be scanning for this week, because when we take a look at what I wanted to cover briefly, because it's our traditional AD lines, all right, the NASDAQ, due to the fact of our being together, we've been talking about the weight of the NASDAQ coming in with biotechs weighing on the market and certain tech names. Obviously, these high flyers really got beaten up. But here's one thing I think is just awesome. Notice where we get this big sell-off. Look at that big trend to the downside, okay? And then look what happens at around the end of, let's say this week, the end of this week. We get a little move that could blast right back to the upside. In fact, in the NASDAQ 100, granted, it's gotten down, and I think a lot of people will be focusing on the NASDAQ's going to bring the market down. What they may not realize is that we could be coming into somewhere in this vicinity in here. I don't know about this downside here, but somewhere around the 3460 or so, I'm going to be looking at NASDAQ high correlated stocks in the NASDAQ, in the technology space, in the internet hardware. There's certain tech names that actually move up. And so this break, to me, is I'm focusing more on a buying opportunity rather than let's get short. So I think the names, we're going to continue to see a sector rotation. So the stocks that I've just mentioned, some of these stocks that are down 20, 30%, 40%, they're due for a really good bounce because technically and seasonally, they do bounce. The stocks that are near their highs, that are entering seasonally weak period of time, like your JP Morgan or your Wells Fargo, or more importantly, Morgan Stanley, those are the ones they'll probably take money off the table in that sector, and you're just going to get this sector rotational sloshing effect. Not all stocks are doing bad right now. If you take a look, in fact, even though in the E-mini S&Ps, the top chart is daily, the bottom chart's weekly. All right? So right now, this particular week, the S&Ps will generate a weekly sell signal this week. They didn't last week. So we want to watch for the last conditional change candle if this thing's really going to get beaten up. Remember, we need the S&Ps to get a weekly close below 18.25. We just haven't gotten it. We haven't gotten it but we did get several weeks ago the PPS sell signal. So regardless, I'm not all that. I think it still warrants caution. I think we have an you know, as you can see, we're flashing back and forth of that generated. So it looks like 1854 3/4 generates a PPS sell signal. And, you know, not all sectors are created equally. Some of the AD lines and the volume analysis, if you look at your weekly, do not constitute selling. What we are looking for, and I think we've been fairly good at predicting market direction. We talked about what would the 3% move be in the S&Ps. We said it would be somewhere up in the 1890s, 93, 95. It got there. Boy, and they just put the ugliness on Friday and whacked it down for a 30-handle break and had some follow-through overnight. So I don't think it's uncommon that we see 1 or 2 day break later this week. I would be focusing on some of the names, and that's what I'm going to be looking for on a daily basis. I'm going to be focusing in some of the technology names, according to the NASDAQ, all right, that have they enter a seasonally strong period of time that have just gotten beaten up. I'd much rather buy some of these bigger names at a 30, 40% correction that enter a seasonally strong period of time than have been long way up there. Hopefully that, I think everyone in this room agrees with me. All right, so the markets are open right now. We got what what the weekly is flashing. I think the Russell even, I wanted to point out to you the Russell. While we did get a weekly sell signal 2 weeks ago and the market didn't really get us that close below this supporting area in here, you know, the funny thing is, in all of last week's move, the AD lines didn't completely collapse last week, A. B, the volume wasn't there on a weekly basis. So I hate to say it, man, I'd love to be selling this thing in the hole, thinking the hole's going to get deeper like a sand pit that washes out. But, you know, looking at the New York Stock Exchange Composite Index, I don't know if everyone's aware of this or if they're talking about it on the news, but it closed higher last week, by the way, with strong AD lines, breakout in volume. So the advanced decline, I think what we're looking at is a sector in a major way, huge money off the table in technology names, and then now they're going to come back in and probably look to rebuy some of those names. That concludes our time this morning, and of course we will be watching this through the rest of this week, and I hope I gave you some great information for intel as to what stocks and sectors to look at. Incidentally, these are the weekly high close dojis, Ford even, JBL Circuits, which has earnings, I believe. I'm not sure if it was JBL. No, JBL does not have. I didn't see it on my sheets. I double check on that one. Lowe's, not the Lowe's, the hardware store. Lennar, Home Builder, Staples, Target, still in the retail. I don't think people understand about Target with their problems. People, you know, thing about time is people forget. People might forget what Target, you know, what happened to them, that cyber attack with all the credit card names. But nonetheless, these are some of the names that gave us weekly high close dojis that are still acting within seasonally strong periods. And that's why I put that. I'm not being lazy. I don't want anyone thinks that I was lazy and I'm still on vacation here. So let me go over to, and what I mean by that is I only had one weekly low close doji, and many of you would probably be like, he's wrong. There's got to be. We had an amazing sell-off last week. But folks, I'm dead serious. There was a weekly stocks, low close doji, all O'Reilly Automotive, only one. There was only one name that generated a weekly sell signal. Nothing else populated, okay? Nothing else populated under weekly low close doji. I thought that was pretty amazing. All right. That concludes our time. I just wanted to show our screens and what we're seeing. We'll start our day trading session and look for, let's see, what do we got here? Go to trading room. There it is. Trading room. Hit save. All right. So last week we talked to death about the knob spread. I know I took the trade. I covered like a scaredy cat. And I'm not the first one to admit it. I don't like leverage positions. By the way, that was the best move I ever did because I know there will always be another trading opportunity because the internet on board, we were on a private yacht, about 50 other couples. It's called Sea Dream. You can Google it. We started out at Barbados, and it was just really cool. But I think last week we had a great Friday. Was just the most abomination internet connection I've ever had, and that was at a hotel. I can't imagine. It was mind-numbingly frustrating, but I covered my positions entirely. I hope you guys at least were able to capture some moves on breakdowns because the knob spread, we just nailed that one right to the T, and if you did take it, great. If not, I think there'll be more opportunities. This is an awesome trade to take, guys. It's an awesome market to trade. Again, this is my forte. 2014? Over 30 years I've traded bonds. So I think we're in good hands on that one. And I did tell you that this was my market. So with that said, if you didn't, I hope you liked the chart lesson. We had a breakdown of a trend, and we were talking about a longer-term trend. And I think we got this off, and there it is. Yeah, we got this off a longer-term peak resistance line, something like that. I think is what we had this. We did a very extensive analysis, and that trend line came right in there. It came right to old areas of a swing level, and I said that's where you place your orders, get in that thing, and it was great for a trade. It lasted until what, Friday or so, for even unemployment. So we will look for more of those types of opportunities, and as your confidence builds, then guess what? You'll be able to take those trades, understand how do you do them. It's real simple. You put up two domes, one on the notes, one on the bonds. When we're going short the knob, meaning we're selling bonds, going long, we're looking for the knob spread to go. When you're looking for that black line to go down, you sell bonds, you buy notes against it. When you want it to go up, you buy bonds and sell notes. Okay? That's all that is. Anyway, we'll go through more of that. Thank you all very much, and I hope you had a good trading week last week. That concludes Monday's planning and scanning for April 7th. Thank you. Thank you, Richard. You're welcome, sir. Okay, so that's bonds. Let's put bonds. Let's put this back where we have it. And even, I forgot to mention gold, which stopped right at that 80 area. It never broke below that 64. That was pretty wild. Hopefully the room did well. Hopefully, good morning, Sonia, and everything worked out well last week for a week off. Now, as a full disclosure, There's a couple trades that I am actually looking at. One is, many of you may or may not have access to the video, but the Japanese yen generated a daily high close doji. So the Japanese yen is probably on the least of everyone's radar at this point in time. But the funny thing is the Japanese yen has a nice little bullish pattern. And so in any event, I might be looking at the long side of the Japanese yen. Don't kill me if I change the pound to Japanese yen, because I want to watch the yen this week. I think there's gold in them dar hills. So give the S&Ps a few minutes to get everyone who's on a margin call to flush them out. Daily chart, that's what I'm talking about there, okay? That's what I'm kind of talking about. I think looking at a weekly chart, while we still have overhead resistance in this market, the volume action, folks, the volume action, newer lows, longer term, and let me go over here to a longer term, a monthly chart. You know, I think this market is coming close to a kind of a little bottom formation, believe it or not. If you break out above, and then even on the monthly chart, we're starting to see a little bit of basing action out here in the volume. So looking at the Japanese yen, today will generate, you know, it was a high close doji, so on the close or the open and the market goes up. But I think looking at the market real quick, you will see the Japanese yen from that particular close right there to this particular closing area in here. You know, the funny thing is it was on no volume. So this last downdraft was on very weak volume. Stochastics is oversold and starting to hook up. You're getting a PPS buy signal after a high close doji formation, and I don't think we're going to get a chance in hell to buy this thing on a pullback here. But let's kind of watch it over, with today and maybe overnight. So with that said, I think the Japanese yen, it may be coming into an impressive longer-term potential, not longer term, but maybe in the next 3 to 4 weeks, pop up out of this range. And when I say pop up out of this range, I mean the yen could get back up into 102, you know, somewhere up against, I think we break out of that little downtrend right there, I can see the market coming right into this level right there. 102, 103, something like that. So I want to follow the yen personally. That volume to me looks ominously short-term bullish. Don't you love it when I switch gears on you guys? One day I'm talking cattle, one day I'm talking hogs, next day I'm talking knob spread. I just look for opportunities. What this S&P is going to do to day trade this thing right now, if that's where your interest lies in just day trading, then we'll look for a day trade that we can kind of sink our teeth in during our time frame. The NASDAQ, kind of interesting. I don't know if you agree with that, but the NASDAQ not really doing a whole lot right in here because they've already taken it. They've taken probably most of the air. There's no air left out of that tire to take. And that's why I think we need to really work hard and diligent and look for scan for stocks in the technology sector that we start to see that has recovery. I'm not saying you go jump in and buy the NASDAQ this second, but boy, I think that if we do see some follow-through weakness today, again, it's not how the market opens, it's how it closes. And that's what they were saying on Friday. So, we could we could conceivably see, S&Ps down to 1832 again to 18. Well, here, daily pivots here, 33. We could conceivably see it down there one more time, get everyone all bearish again. And I think that's what the market really needs. They need to get those bears fully committed. I see, as I shared with you earlier, as far as the market, I see short-term correction. There's no doubt about it. There was technical damage on the daily charts, but I don't see longer-term. This is not like 2007, 2008. I don't see long-term damage to the market yet with the weekly analysis. And then I shared that with you on the NYSE, the New York Stock Exchange Composite Index was actually positive last week. Now, unless Genesis is wrong, someone double-check that for me. Okay? But I believe, looking at the NYSE, it was positive on a weekly basis yet last week. John Koner, thank you for contributing. You're right. Facebook got whacked. You know, I could have spent another hour showing you all these stocks that have been, you know, berated. But I think we had a low close doji on our sheets the other week on Facebook, if I'm not mistaken. So from top to bottom, that's only a 20% move. I think we actually, I don't know if we picked that one out. Oops. Sorry about this, guys. A little behind on even opening up my own stuff. Facebook, though. All right, so monthly support in Facebook, right against, now this is kind of wild. You got to admit, I don't know where I get this stuff from, but gee whiz. Old resistance, stalled, wouldn't rally, came back, supported, broke it initially, and generated a buy signal. And guess what we are near on Facebook? A monthly buy signal. I mean, not a monthly buy signal, monthly pivot. I'm still on vacation. I'm in vacation mode, sorry. See that 54.62 is monthly pivot support. I think the risk on this trade on Facebook is right underneath this last conditional change. Anyone that's been buying, and I want to share this with you, anyone that would have been buying in this, once we broke out of that high and this high, okay, so basically the accumulation, not distribution, the accumulation in here, anyone that had been buying in there is probably this line in the sand in price matches our monthly pivot support in Facebook. So perhaps we might get, you know, with Facebook, this, I mean, if you liked Facebook and you were trying to look for a pullback, here's your pullback to buy some. Maybe selling a naked put on that if you wanted to own it. If you wanted to own it. And if you wanted to own, like, say, 1,000 shares, you might want to sell some out of the money puts underneath 51. Did everyone hear that? If you don't want to own it and you think the market's going to linger, then you just do a credit put spread, and then obviously that would be one we could look for a little shorter term nibble, look for a little consolidation, but we are trading near monthly support.